Hello, Bob. Thank you once again for joining us. The markets have been reacting to the new coronavirus vaccine, as well as the US presidential handover. But we still have macroeconomic data that's going to be released to be discussed. How's it looking for the major currencies in the week ahead?
The markets are obviously focused on the coronavirus and the vaccine. There's plenty of data in the week ahead. For the greenback, busy week. ISM manufacturing, non-manufacturing numbers in the first half of the week, along with ADP non-farm employment change figures. Those will garner plenty of interest ahead of obviously the weekly jobless claims figures on Thursday after last week's disappointing numbers, and then non-farm payrolls and the unemployment rate on Friday. So expect plenty of influence from the stats. For the pound, relatively quiet week, just finalized private sector PMI numbers and the construction PMI. Barring any marked downward revisions, shouldn't have too much influence on the pound. Obviously there's other drivers for the pound in the week ahead. For the euro, busy week as well. We've got prelim November inflation figures. We've got manufacturing and service sector PMIs for Italy and Spain, and finalized numbers for the Eurozone, France and Germany. And then Germany comes into focus with retail sales and factory order figures in the second half of the week. Markets have been relatively forgiving on the economic data front, largely because of the expectation of obviously the vaccine and the reopening of starting with France, and then obviously Germany is talking about easing containment measures for Christmas. The vaccine is going to facilitate a lot of that going into the new year. So these are all positives, but obviously there's a lot of data to consider.
It's quite clear that despite all the economic data releases, the focus is still on US politics, Brexit and the coronavirus. However, if I was a commodity currency trader, what should I be looking out for to avoid any sudden surprises in the market?
Well, for the Aussie dollar, it's a busy week ahead. Key stats will include trade and retail sales figures and the all-important GDP numbers for the third quarter. Obviously, expectations are for a rebound from the second quarter meltdown, so we'll have a look at the economic data and what's likely ahead for the fourth quarter. Obviously, retail sales and trade figures will be quite telling. For the loonie, also a busy week, GDP numbers, trade and employment figures due out through the week. Expect the trade and unemployment numbers to have the key influence on the loonie in the week. For the Kiwi dollar, it's a quiet week, just business confidence numbers, but that is a key number. Obviously, the RBN is looking to support the economic recovery. Business confidence and consumer confidence are key to support the rebound. So expect some influence from those numbers as well. Ultimately, however, obviously we're looking at market risk sentiment towards the COVID-19 vaccine, and how that's going to fare in terms of the economic recovery.
So we need to look out for the Canadian GDP, which has quite an effect on the Canadian dollar exchange rate. Let's switch our attention to Asia now, shall we? Coronavirus is hitting safe haven assets quite hard. Among them is the Japanese yen. How would you comment on that, and also its neighbor, the Chinese yuan?
The Japanese yen, relatively quiet week ahead. Prelim industrial production figures and retail sales figures kicks things off at the start of the week. Obviously, retail sales is a key number for the Japanese economic recovery. Household spending has been quite dire as a result of the pandemic. So any positive numbers would be a boost for the Bank of Japan, who's yet to deliver more monetary policy support. In the second half of the week, not much really. Service sector PMI numbers, these are finalized numbers that are unlikely to have a material impact on the yen. Focus will remain on Brexit and obviously COVID-19 and how the vaccine progresses. And if there's going to be a release before the end of the year. For the Chinese yuan, we've got private sector PMI numbers. Expect obviously the Kaisen manufacturing PMI to be the key driver midweek. Obviously, the markets are expecting the Chinese economy to continue to rebound, driven by domestic demand as Europe and the US continue to struggle to contain the COVID-19 pandemic.
So it's quite clear that the Asian markets will react to the coronavirus pandemic and the upcoming vaccine. Hopefully, things will improve. Finally, and we've touched on it quite a lot throughout the interview so far, geopolitical risk. Can you elaborate a little bit more what we should be looking out for in the week ahead?
COVID-19 vaccine progress, efficacy rates of 95%, 94% for Pfizer Inc. and Moderna Inc. That's pretty impressive. Expectations are for vaccines to be out before the end of the year. That's not going to meet global demand, however, so that's going to be key. Manufacturing capacity is going to be an important one, and obviously logistics to deliver the inoculations around the world to allow governments to reopen borders and allow the economic recovery to begin. Plenty of monetary policy and stimulus support to provide for the economic recovery. So it's all down to the COVID-19 vaccine now. On the Brexit front, obviously the pound's, in the spotlight. Talks are continuing after the suspension last week because of COVID-19 in the EU camp. So any progress, and expect further upside for the pound that should be approaching 135. If there's any talk of a no deal, we're going to be seeing 120s, pretty quickly. So France, Germany, the likes are all going to have to compromise on UK fisheries at a minimum, for a deal to be hatched. Failure, we're looking at a no deal, and obviously there's doom and gloom for the pound if that's what happens. Extensions are possible, and obviously there's talk of a review of any deal within a 10 to 15 year time frame. That's what the EU wants. UK are asking for 3 to 5. They don't want to be under this constant Brexit thing forever. EU's yet to buckle on that one, and they're still insisting on 10 to 15. Yet another example of the EU's unwillingness to meet halfway.
Well, that's all for today, Bob. Thank you so much for joining us, and I'll see you again next week. That was The Week Ahead with Bob Mason of FX Empire. Stay in touch with all the latest developments in the market by following us on all our social media outlets.